Hi, good afternoon. This is Johnny once again, and I'm recording this video to show you yet another strategy that you could use for day trading. So once again, before I begin, I'd like to let you know that I do uh, show you a lot of strategies that you can use to trade. Um, I don't really recommend a specific strategy that you stick to. What I would actually recommend is that you look at all the strategies, watch the videos, see what strategy resonates with you most, especially in terms of your availability to trade, your patience level, your account size. Then do your back testing. After that, if you're confident about the strategy and you can execute it consistently, then choose that strategy. Okay. So let's get right on to our video for today. So today's video is called the Liquidity Master Playbook, and this is a long-only strategy, particularly for stock indices like Germany 40, US 100, Japan 225, UK 100. Uh, Practically, these are risk assets with a long-term long bias. Um, since in these assets, dividends get reinvested, economies grow, so they always move higher most of the time. Not all the time. There would be times of bearish movements and bearish years, but most of the time they'll be bullish. Okay, so just a few things about the strategy. We'll be using the daily time frame to look for our setup and H1 for execution. Okay, so this is called the Liquidity Master Playbook simply because we're looking for sweeps of the daily levels, okay? In particular, the lows. Okay, so we're looking for the sweep of daily lows. And once price gets down to those daily lows, we're looking for specific patterns that we could get right into for our long entries. Okay, so again, we're looking for price to revisit previous daily lows, okay, which have not been swept or which have not been revisited by price yet. And then once price is at those lows, we look for a pattern, which I will show you later, to take our longs. Okay, as usual, risk management, 0.5 or 1% every time you take positions, and we usually divide it into two. So if it's 1%, divide the position into two, 0.5 and 0.5. If you're trading in 0.5% risk, divide it into 0.25, 0.25. Okay, so let's take our first example. Okay, so you can see right here in this daily low right here has been taken by price at this day, February 17th, 2026. So we're going to revisit this level right here and take a look at our entry pattern. Okay, of course, there are other instances where price revisited the daily lows, but I did not find the entry patterns in these days. Okay, so hence no entries. Okay, so in this particular day, it has touched and revisited this previous daily low. And then let's take a look at this in H1. Okay, so there you have it in H1 view. So this is your previous daily low. Price has revisited it here. Okay, and let's take a look at our entry pattern right here. So we call the entry pattern a sharp turn. A sharp turn being we are looking for bearish 1 hour bearish fair value gap that would deliver the price into the previous daily low. Again, this is a bearish H1 fair value gap that would then point towards that direction and deliver the price to the daily low. Why not this one? Well, when this fair value gap has been formed, price has already touched this daily low. So this FVG is not really responsible in delivering price to the daily low. So we delete this part right there. Okay, so what's the next one? So the next one, since it's a sharp term, we wanted to take a look at or look for an opposite FVG, which is a bullish 1 hour fair value gap that would form above this daily low, this previous daily low. So this level has been swept already. This bearish H1 FVG has delivered it to that low, and we need an FVG to point us to the direction of the opposite side, which is the long, since it's a long only strategy. But not only that, we want to make sure that the confirmation candle, this last candle right here, as you know, an FVG is formed by three candles. First one, the second one, which forms the FVG body, and the third one, which is the confirmation candle. So this confirmation candle must close above the upper border of this bearish FVG. So you see, this is the upper border of this FVG, meaning price has already gone through and taken out all those shorts, okay, and price is ready to reverse. Okay, so this confirmation candle has closed above that H1 bearish HPG. So this is where we can take our entry. Now, many of you would say, why not take it here in the mitigation? Well, sure, you can do that. You can wait for price to mitigate this FVG and you can take a long. However, it's not all the time that price will mitigate an FVG. There are many times, more often than not actually, that price does not mitigate this. So we want to be a participant of this trade, not somebody who just buys stances on the side and not participating. So at the open of this next candle, we take a long, a long, and our stop loss would be below the lowest level of the sweep, which is right here. So this is where the sweep happened, and that's the lowest level. Now, again, we divide our positions into two. If you're entering 1%, then 0.5, 0.5. If you're entering 0.5%, then you divide it into 0.25 each. First position will be 1:1, okay? Or if it's not 1:1, you make sure that it is not above a daily swing high. Okay, so if you revisit the daily time frame right here, okay, we can see that there is a daily swing high right here. Okay, that's a daily swing high. Okay, so we want to make sure that our 1:1 is not above this. Okay, because if it's above that, then we have danger of running into some resistance right here. Okay, so go back to H1. Look at that. Where's our position? Right there. As you can see, it's still far away. This is our preview. This is our daily swing high right there. So our 1:1 is way below that. So we can take 1:1 and bank on this profit right away. So if it's a $50,000 account, then that's a $500 for 1%, right? So you already have $250 banked right there. So what do you do? After you bank that 1:1, you move your stop loss to break even, or you can maintain that. And what you do is you go to your daily time frame and you can start trailing. So how do you trail that? Every time price makes swing, a daily swing low, you trail your stop loss. So let's say if your stop loss is right here, okay, right there at this level, sorry, here, this is where your stop loss is at. Okay, so what you want to do when price hits your 1:1 is wait for price to create a daily swing low. And in this case, you'll see the daily swing low is right there. Okay, so once your daily swing low is right there, keep on trailing it as long as price keeps on making those daily swing lows. As you can see right here, this runner did not go very far, so we got stopped out right there. Okay, so let's take a look at some other examples, like this example right here. Let's go to that. Okay, right here. So previous daily low has been swept. Okay, we identify that there's fair value gap that delivered price to that sweep. And this is that gap right here. Okay. Okay, so you can see that. Then after that, we look for a bullish gap, which would close above this. So definitely not this one, because this one did not close above that bearish upper border. So we look for another one, which is this one. Okay, so you can see there is a small gap right here. Okay, there's a small gap right here. And this gap will not work. This gap will work. Okay, right here. This is closed. So we enter that as soon as this H1 candle closes, stop loss below that swing. First TP is 1:1. Let's go to daily time frame, making sure that we know exactly where the next swing high is at. So this is where the next swing high is at. Okay, let's go back to our 1 hour. Okay, so our 1:1 is safe right there. Okay, so the next thing after we have taken our 1:1 is to trail our stop loss. Okay, so let's say our stop loss is right here. Okay, so we need to trail below daily swing lows. Okay, where's our daily swing low? There. So this is where we are. Okay. So do we create a daily swing low? We have created this one. Yes, right here. Okay, move your stop loss right there. After that, you encounter your daily swing high. It went blasted through that, so that's fine. We look for another daily swing high, and that next daily swing high is actually right there until we get stopped out right there. So from here, you've actually made a very powerful 1:9, right? And so that's how it's done. I hope that this video has helped you a lot. If you have any questions, um, you can join our trading and investing community called Platform 15/25. I'll leave the link in the description. Thank you. Bye-bye.